Welcome everyone to our weekly Forex market analysis call, and this is in preparation for July 10th to 14th of 2017. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investment needs, I recommend you talk to your investment advisor. Okay, so let's get started. So in terms of our agenda today, we'll take a look at the economic news, see what's coming up for the next week, and also looking at some of the things that happened last week and what impact we may see in the upcoming week from those events. I'll try to pull up the COT data. The charts have not been showing up properly on my computer, but we'll give it a try. And then, of course, we'll take a look at the charts. We'll take a look at the majors today. And in the upcoming weeks, we will kind of broaden those, the number of charts we are viewing so that we're looking at all the opportunities, not just the majors. So let's dive in. Okay, so from the weekly perspective, first thing I like to look at when doing my preparation for the week is the calendar. So calendar is very, very important because it will tell us what news is coming up. So we have on Sunday, we have CPI and PPI data for China. So these numbers, CPI is the inflation number. This number is important for Australia and New Zealand, even though it's Chinese and Chinese data, but because Australia and New Zealand do a lot of business with China, this number will be important for them and will have an impact on New Zealand and Australian dollar. And on Monday, really the most important number here is the business confidence number for Australia. So this will be important as well, so something to keep in mind. Tuesday, so we don't have any red news yet. All of this is orange news. Housing starts for Canada. We have a couple of MPC members speaking. So these ones will be important because lately Bank of England, there were 3 members who actually voted in favor of raising rates, and that is an increase from previously. In the past, we've had 0 or 1 member who would say, okay, we need to raise rates. But now we have been seeing more members that are actually asking for interest rate hike. And because of that, Bank of England Governor Carney came out and said that they are going to debate this interest rate hike. So basically, what that shows us that the Bank of England is moving more towards raising rates. They're not there yet, but they have already started talking about that, which gives British pound a bullish bias. However, lately we saw some negative numbers come out, so keep that in mind as well. But overall, from fundamental perspective, British pound has a little bit of a bullish bias because of the central bank wanting to raise rates. So that's why the comments from MPC members will be important, because if they are also saying that we need to raise rates, which just gives it more of a bullish bias. And then we have FOMC member Brainard speaking. Wednesday is when we start seeing the more of the red news here. Average earnings index will be important because if it just shows how the economy is doing, if the people are getting paid more, which is positive. But if what we saw for non-farm payrolls, we saw that the number was good, number of jobs was good, but the average earnings had actually gone down. That's why we had that whipsaw thing, and we saw some of the negative reaction. But overall, so that's why market does pay attention to this average earnings number. Bank of Canada rate statement and monetary policy report coming up. So Bank of Canada is another central bank that has been talking about interest rate hikes, or at least not interest rate. Yeah, they have actually talked about interest rate hikes. So we're not expecting an interest rate. Oh, they are expecting an interest rate hike. Okay, so there looks like the market is expecting an interest rate hike, and Bank of Canada has come out and said that. So if they do raise the rates, this will be positive for the Canadian dollar. So anything against the Canadian dollar would be something to watch out for. So yes, Greg, it's better not to take a trade. So I would not have a Canadian dollar trade. at 10 a.m. on Wednesday, for example. But the way to trade these, there are two different ways to trade these kind of things. One is the expectation. So generally, so when there is an expectation that the interest rate is going to go up, which means that particular currency is likely to strengthen. So going into it, to maybe an hour ahead of the news. So that will be the time when market will be expecting the interest rate. So from Monday to, let's say, Wednesday, keep an eye on it, see if it starts to go up, because leading up to the news, generally we see when there is an expectation, the traders will price it into the currency price. So that's one way to trade it. Other one is, let's say we are expecting an interest rate hike. They do come up with an interest rate hike. Following that, just give a little bit of time, and then chances are it will go up as well. So Bank of Canada after the Fed. So Canada is very usually quite closely tied to the U.S. So when U.S. starts to do something, Canada does this, or starts to at least they kind of start following in that path as well. So now with Fed having done 3 interest rate hike, this one will be the first one for Bank of Canada. So it sets the tone for upcoming months for Canadian dollar. Hence, it is very important. So that's why Canadian dollar has been so strong, because Bank of Canada has been talking about interest rate hike. So that's that. And then we have Fed Chair Yellen testifying. This, of course, market will be watching to see her commentary or hear her commentary. Anything that comes out of her mouth will be put into some sort of a context. So that's where it's likely to have an impact on US dollar. And then we have Bank of Canada press conference. Of course, there will be follow-up questions. If they raise interest rate hike, there will be a statement. So that's why there will be questions in regards to the statement. So that's something to be kept in mind. And also with the Bank of Canada, the reason they want to raise rates is because the housing market in Canada has been going crazy. And they want to sort of manage that before we get this whole bubble burst situation, as we saw back in the day. So that's why it's a touchy situation for Bank of Canada. There are parts of Canada that are not doing so well from economic perspective, but with the housing market, there is a chance of having a bubble. And in terms of NAFTA, yeah, NAFTA is bad, or renegotiation of NAFTA will be bad for Canada. So from overall, like longer term fundamental perspective, there are some things that will be problematic for Canada. And that's why it's interesting to see Canadian dollar go up, but it's been purely a play of interest rate hike. So if NAFTA gets renegotiated, that will be bad for Canadian dollar, because it will not likely not be good for Canada. And right now we're seeing more lumber import duties, or for Canada will be export duties that are being put on Canada. And so if there are more taxes and duties that get put on Canadian exports, that will be bad for the Canadian economy. So keeping all of this in mind, I don't see Bank of Canada being overly aggressive with their interest rate hikes, but they may start doing interest rate hikes because they want to manage the housing bubble that's going on right now. So it's a bit of an interesting situation from that perspective. But so yeah, keep an eye on the news that comes out. So what I normally do is, if you look at the top of my screen, you will see there are a bunch of things open. I usually open Bloomberg markets. I have Reuters markets open, and then I also normally do a news feed, which is over the Squawk. Right now it's not on because it's the weekend, but normally I have the Squawk on so that you can hear the news as it comes out. So those are some of the things I tend to monitor while I'm trading. They open when I open my browser, so they're set to my homepage so that I don't forget to look at them. I recommend doing that. And those are the things, like, for example, the NAFTA and things like that, that will be talked about in those news feeds. So something to, this is just a little extra if you want to keep that. Okay, going forward on Thursday, we have again here, China trade balance number, that will be important here as well. But going into Thursday, the important number will, here we have Bank of England credit conditions survey, and then we have PPI number, which is the purchasers index, which is a leading indicator for the economy. So that will be important, of course, unemployment claims. But again, Yellen testimony will be the main one. But we're likely to see more impact on Wednesday from this than on Thursday, because this will be the second day. So this is when the news feed comes in and becomes very important, because any of the comments, so they usually have people monitoring the testimony, and any of the comments will get put in the news feed. So there's a question, do I provide discount for the Forex courses? Not really. If I launch a new course, I may do a discount, but they are priced. I think they are fairly priced, so there's not a lot of promotions that I generally run. Okay, so going back to this, again, we have more FOMC members speaking. And Friday, there is a holiday, French holiday. So a lot of US data coming out this week. So we have CPI number. This is the inflation number. This is the number that we do want to see, or the Fed wants to see, come out positive. So if the inflation is not coming out well, and the core CPI and core CPI, both inflation numbers, if inflation is not good, then they cannot raise rates further. So this is something to watch out for. And also in the last FOMC statement, they also said that they're going to they're going to think about tapering the stimulus in the market. So there are two things that they do. There's an asset purchase program as well as the interest rate. So they've already started raising interest rate, but they're still pumping money into the economy. So now they're talking about stopping or tapering off that money that's going into, because they're purchasing all these assets. So if that stops, which will be good for the currency, but it'll be bad for the stock market. So just to keep that in mind. Fatma, I don't understand your question. Do you have news trading start webinar? No, I don't really trade the news. Actually, I tend to stay away from the news. I may trade the news going into it, like leading up to something, but not actually. I don't really trade the news. I just kind of sit it out. So all these numbers, capacity, utilization rate, industrial production, these are important numbers. The retail sales numbers are actually, it's a lagging indicator, whereas this capacity, utilization, industrial production, those numbers are leading indicators. So important to kind of keep track of them, because they will show us where the economy is going. So red news for sure, very, very important. The other ones are just something to sort of keep in mind. So let's see if I can bring up the COT data here. It looks, hopefully this will load. No, it doesn't look like it's loading. Something's messed up with my flash, I believe. Okay, so normally there should be a chart that should load up here, but it's not doing that. So let's just move on to our charts here. Okay, we'll start with Euro US dollar. Today we'll just look at the majors. So Euro US dollar, we have seen a break of this previous high. So we had a large move up, and this week has actually been a pullback, and now we have a rejection of a 1.1300. So this 1300 number level has been rejected. So the way this candle closed, even though it's red, but there is rejection in the bottom, which means that we could see prices move up higher. So the first target here would be a 1520 level as the target to the upside. The second one, now then we are moving into 1600, 1.1600 or 20 level. So this looks bullish just based on what this shows up as from weekly perspective. So let's go into, so from the weekly perspective, we're looking for price to go into 1.1520 or 1.1620-ish area here as well. From the daily perspective, we do see that it's looks like it's pulling back a little bit. So the best place to look for a trade will likely be in this 1.1300, so 1300 area. So if the price comes down into this level here, so if the price comes down and holds above this level, so this will be a good place to take a long trade here. This is where I would be watching for a long trade. So looking for price to come back and test this level again. So around that 1300 level. And if price holds above this level, then we are looking for a further move to the upside, and then looking for those further targets that we just talked about. 1500, 1.1520 will be the first target to the upside. So overall, this euro dollar looks bullish. Pound here. Pound has been interesting. Pound, there are a couple different things going on with the British pound at the moment. One is, of course, Brexit. That is a big concern. And second one is the whole Bank of England. So those two things are kind of the driving forces in the opposite direction. So in terms of our targets here, I would consider this more of a range bound. So if you take a look at that, ignore the yellow line that just shows where the price is at the moment. So if you take a look at this here, we have been trading from a weekly perspective. We've been trading in this range since April here. So since then, we have been in this range. When price comes into 1.260 level, it goes up. Once the price hits that 130 level, which it did here, again here, it tends to pull back into the range. So pound dollar looks range bound. So if we go closer here, looking at the 1 hour, looking at the daily chart here. So we looked at the weekly. As you can see, this is the top of the range, 1.3020 area. And then this is the bottom of the range, 1.260. So since April here, we've been in this range and we have not come out yet. So at this point, I would be looking for more range bound trades, which means if price goes up towards this 130 range, we're looking for a selling opportunity. And if the price comes into 126 level, I'm looking for a buying opportunity at the bottom. So we want to make sure price stays above this 12600 level, and that would give us a nice long opportunity. But here, so Friday close was very, very bearish, and that gives it a bit of a bearish bias, which confirms our range bound bias, because in the range bound trading, we're looking for price to drop when it goes to the upper limit and rise when it goes to the lower limit. So in this case, we could get a pullback here. So the best trade, in my opinion, will be the one up here. If the price goes up, test the high again, and rejects the high, so it gives us one of these type of candles, this will be good. This is a nice bearish engulfing candle. So something like that, either a pin bar or a nice bearish candle, that would be a nice one to take, and we're looking for price to come down. But the daily one here, we could see price go back up, either all the way to the high or even into this 129.50 area and then drop. So those are the two options that I will be watching. So let's take a quick look at the 4 hour in this one here. So here's our 4 hour. As we can see, price has made a lower high. So in this case, from the 4 hour perspective, if price goes and tests the 129.80 level, this here is a good support and resistance, as we can see right from here. That's a nice level to trade. Or if it doesn't go that far, it may only go as far as 129.30 or even 50 area, which was the previous pivot point. So, so this is where we'll have to, entry will be a little bit, it'll be based on what happens here. It was definitely, we are making lower highs, double top here, a lower high. So this gives it a bearish bias. So basically trading towards the bottom of the range. The entry will have to be seen based on how price reacts. So I like the 1.2980 level. I like the 130 level. and I'm okay with the 150-ish level, but that's where we'll have to just kind of wait and see how price reacts. So there's this pin right here, which looks good, but those are a few levels to watch out for. So bearish on pound dollar. Okay, dollar CAD. So this is what I was talking about. Ever since Bank of Canada has come out and talked about raising rates, Canadian dollar has been very strong, which means dollar CAD has been dropping. So now we are looking at the next level here. So on Friday, we broke through the 12900, and now we're looking for, so we're bearish on this based on the weekly close. And going into next week, let's take a look. Let me get rid of a few lines here. Okay, so the first target will be 12800. This one right here, this pin, this is an important support and resistance area. So 128.20 to 12800. Next target is 1.2650. So those will be the two targets to the downside. Looking at our daily close here, see how price, we were watching this level in our trade room, 1.30. See how price stayed below this level, and then it has made the next move to the downside. So now the support here, has been broken. So in this case, the way I would look to trade this would be a pullback here into this previous level. So 129.13 or 20-ish level would be the place I would look for if the price holds below this previous support level, which will now turn into resistance. We're looking to take a trade here to the downside once it stays below that. So if we squish the chart a little bit, this is where we are, and this is our next target, so 128.20 level, and then we could go all the way into 126.50 level, especially if they raise rates. And in between, there will be other levels to watch out for here as well. So this one, for example, 127.50 looks good. So that will be next one, and then maybe we should mark that. And then we are looking into the 126.70 because it will take price some time to get there. That's quite far at the moment, but definitely the overall bias is to the downside. So just a quick kind of point here. See how price broke through this previous support and resistance level and then held below this and then dropped. Same thing here. We have another level here where price just holds below this level and drops. So this was the same story here. Price dropped through this level, this previous support level, and then held below this. It became resistance, and now it's broken through the next level. So we may see price come and do the same thing into this area. So 129.20 area. So price may come back up here and then hold below that level and then go lower. So we may see one of these and then another drop to the downside. So the yellow lines are just where the price is currently. It just marks it on my charts. That's not, I don't actually draw that line. The white lines are my support and resistance line. I'm just looking at previous levels. So let's take a look at Aussie and I will explain that. So what I'm looking at is previous support and resistance where price has reacted previously, and I am marking those levels. So looking at Aussie here, Aussie dollar, I am bearish on Aussie dollar. So see how this is where I'm looking. So this, I put my line here because this is where price has reacted multiple times. See how many times price tried to break this level and it was not successful in doing that. So this gives us a strong resistance level. And now we can see the price has bounced off of that level. So we're looking for price to move lower. So the first target will be 75.30 level, which is the bottom here. We can actually even take away this one here. That's not necessary. Let's get rid of that. So that's how I mark my support and resistance level. I just look at levels or areas where price has reacted, and I go and put a line there because this becomes a resistance line. See how we have a pin here that shows me price has reacted here, so that becomes my support level. So I just kind of look to the left of the chart, see where price has reacted, and I just draw a line there, so that becomes support. So Aussie dollar bearish here. Let's take a look at daily, see how price has reacted. So sometimes, just to keep in mind here, price will break through this level, and this is where what's called the stop run. So price will try to market makers make it look like, okay, it's going through this level, everybody jumps on board and to take that breakout trade, and then they pull the price back in because they're actually trying to sell, and they want to sell when other traders are pushing the price up so they get the best price. So that because they have large orders in, if they put the large order in, it will crash the market and they won't actually be able to sell at a good price. So they try to create this, they make it look like everybody's buying, so all the other traders jump on board, and then the market makers will pull the price back. So that's called stop run. So that tends to happen. So keep that in mind. We don't want to go long in these till the price stays on the other side. So anyway, so this is a resistance. We're looking for price to come lower here. So in this case, the good level to look for an entry would be this one here. We're looking for price to pull back a bit into this 76.38 area, and then looking for a move to the downside. So see here, this price has reacted in the past. So I'm basically looking for price to react on the other side and stay below this level. And the first target here is 75.30 area, this support level right here. And then we are into the bottom here, 73.80 area, which will be the next target to the downside. So just a comment on Australian dollar. The reason, besides the technical, that the reason price is coming down is because one is technical. This is an important level. As we can see, price has reacted several times here and not been successful in breaking it. The second one is Australia, Bank of Australia, RBA, Reserve Bank of Australia. They were actually not hawkish on interest rate hikes. So the three central banks that are hawkish at the moment: Bank of Canada, Fed, of course, not counting the Fed. So Bank of Canada, ECB, European Central Bank, as well as Bank of England. Those three banks have actually made hawkish statements saying that they are looking at either interest rate hikes or they are looking to take away the monetary policy stimulus. So either one of those will be statements will actually be good for their currencies. Australian dollar, RBA has actually said that they are not looking to raise rates, so they're not as hawkish, which does not create a positive market sentiment. It actually creates a negative market sentiment. So they are one of the banks, but they already have a high interest rate compared to others. So they are already higher. That's why this is not they don't need to be any more hawkish on this. But because they are saying we're not going to raise rates, this is why Australian dollar is weaker as well from fundamental perspective. So in this case, we have both the technicals as well as the fundamentals coming together to give us that opportunity. So 76.38 area would be the one I would look for. There's also this pin here, and generally price tends to do a pin to pin test. So we may see this push up and then come down. But overall, though, I am bearish on this and looking for Aussie dollar to move lower. Okay, New Zealand dollar. Let's get rid of some blinds here. So this is where we are. Again, we are at the top of the range here into resistance level, just like the Australian dollar. So in this case, I am bearish as well. So we have had a bearish candle now. We have seen rejection from the highs. So I'm looking for a further move to the downside. So the first target would be 7,200. And then further down, we are looking into 70.50 level, which is this one right here. So let's go to the daily chart. As we can see, price hasn't been able to break this level here and didn't even go test it. So we are right into this resistance here. And since then, price hasn't really done much. It's traded in a very, very narrow range. So in this case, we could see the price go and test the high once again. That is possible. And we may get one of these like multiple top situations, or a double top situation here where price stays below this 73.44 level. So in that case, if the price holds below here, we're looking for a short. So I'd be looking for a short at this point here, closer to 73.40. Or if the price, let's say, does not go all the way up there, another good level would be, let's pull this closer a bit, right into here. So this one, which is 73.12, so 7300 to 73.20 area, we could get one of these moves. That could be that's another potential entry to watch out for. So 73.12 or 7300 area for a likely short. So New Zealand dollar short, Aussie dollar short, dollar CAD short, pound dollar, we are looking for a range bound move. Euro dollar is the one that's bullish at the moment. So a couple of potential trades, other trade opportunities. Euro is bullish, pound is bearish, euro pound long could be another potential trade to keep in mind. And then yen has actually been quite weak. So Aussie, so anything against the yen has been very, very weak. So all the yen crosses have been very bullish. So dollar yen here looks bullish. Target 114.38, which is the high here. So we'll cover these quickly here. I won't go in depth, but we'll just have a brief look. Pound yen, though, not as strong. Dollar yen is stronger, but all the yen crosses, it's still holding above the 146 level. So overall, it does look, so this one is bullish, but not as strong. Euro yen, very bullish. So we could look for price to pull. If the price pulls back into 129.00 and holds above, we're likely to see a further move higher. CAD yen, very, very strong. It's gone through all these previous levels and we are into the highs. So that will be something to watch out for because we are into the highs. So I would wait for a pullback. Pullback probably into 8800 level. So, or 88.00, I should say. That would be a good place. So this is where that level is coming from. So if it pulls back into this level and stays above the 8800, that could give us a potential entry here. So something like this, and then looking for a move to the highs again. So 8800. And if this breaks, so this is where it may be a breakout trade, but I like to wait. So this is like all-time high here. Not all-time high, but a time like we have not seen this broken for some time. So for this one, we have to go into this one here. So the next target would be 89.50 level, I would say. So we have room up here. So if the price breaks through the high, holds above on the other side, then we look for the move to the upside. But for now, a good level to look for would be a pullback into 8800. And if it stays above that, that may give us a long opportunity. So CAD yen is very bullish. Aussie yen is bullish as well. It's a range bound, actually. It's been in this range for some time. So if it pulls back, especially into this 8600 level, that may give us an opportunity for a long. A New Zealand yen, it's holding above this previous support level at 8200. So it looks bullish. I will look for a bit of a pullback, maybe into 8250-ish area. See this resistance right here as well. So this is a good level. So it may pull back into this level and then may do another move higher. But yen is weak. Canadian dollar is strong. Euro is strong. And so euro against the pound, euro against the yen, and actually CAD against the yen. So anything against the CAD would be Aussie CAD, for example, is bearish. So that's something to keep in mind. Swiss franc is another one. Don't believe I have a chart open, but I was just looking through it before. So Swiss franc is another one that has been strong. So all the yen crosses are strong as well. So that is it. So I hope that gave you some ideas on what pairs to look for. Any questions before we wrap it up? Okay, so I will take that as no question. So we'll call it a wrap for today.